Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Hantech Markets. Each week I take you through the key events that I believe will be driving your investments in the coming days. Certainly the euro remains on the agenda for investors. This is on the back of the ECB press conference that we had last week, whereby Mario Draghi said that the Governing Council were ready to act and comfortable with potentially moving on monetary policy next month. Now, he did caveat that by saying that the ECB staff projections could have an impact on that decision. However, certainly you would also factoring in possible movements in inflation as well, with the May CPI flash number that comes out at the end of the month. That could have an impact, but certainly the market at the moment is factoring in or moving to factor in potential monetary easing by the ECB. A couple of hundred basis points already taken off the euro, and it now looks like this is what we're basing our case on. Now, also this week we've been focusing on the Ukraine and elections for the referendum that has taken place in the Donetsk region in the eastern part of the country. Now, they resoundingly voted for pro-independence, and that doesn't necessarily mean that they're going to be joining Russia or anytime soon. However, it certainly continues to muddy the waters in the region, and already the US, Kiev and the EU have deemed this referendum illegal, so it's certainly not going to help matters. Okay, so what are the impacts on the FX markets? Well, certainly the euro has been jawboned lower by Mario Draghi. That's what he'd been setting out to do. That's a good thing for the euro in terms of trade. And also for the dollar index as well. That's had a big impact on the dollar index. Dollar index was back at a key level at 79.1. That jumped significantly on Thursday, and in a couple of days since then, and that has now taken off the dollar index from the October 2012 low. Now, the overall impact on euro dollar has been for a sharp correction, but euro is now on Monday morning looking to bounce slightly. However, it's coming up against a key resistance band now, 37.75 to 38.10, and it depends on if it can break through that as to whether it can continue to move higher. Cable had a bit of a correction as well, but certainly the bullish chart that we're still seeing on cable continues to suggest that buying into weakness on the sterling dollar is a way to play it. Certainly there's a nice band of support between 67.85 to 68.30, 68.40. I think is a good area to be looking to buy cable. On dollar yen, as I said, an improvement in risk appetite today. I've seen dollar yen pick up once more. It's back towards that 102 pivot level that has been tested previously, and that is, I think, going to become an increasingly key level. That is, if it can move above 102, that would complete a near-term base pattern and imply gains towards 102.60. But you also need to bear in mind there is a band of resistance between 102 and 102.20 that could also cap the gains. But at the moment, it is testing that 102 pivot level. Okay, moving on to the indices. The indices haven't actually been affected that badly by the Ukrainian situation recently. If you're certainly looking at the Dow Jones, that has actually achieved an all-time closing high on Friday. So that suggests that investors are beginning to look past the Ukraine. However, that doesn't necessarily mean we're bullish, because a lot of these indices are still struggling to really make too much headway on the upside. The S&P 500, for example, continues to flounder underneath the 1897 all-time high, and with the earnings season coming towards a close, it could still struggle. Now, the FTSE 100, on the other hand, actually looks pretty strong at the moment. Nice uptrend in place, and it needs to hold above 6,767. The DAX, for example, is now also in a trading range, but it's looking to break above that trading range. 9,645 is the peak, and if it can move above there, that would reopen the highs at 9,720. Okay, looking at gold. Gold has had a rather choppy couple of days. Two doji candlestick patterns on the last couple of trading days suggests uncertainty, and the market not really knowing how to play gold at the moment. Gold is still a major factor on major play on the Ukraine story. So just watch out for that. Every time the Ukraine story starts to flare up, gold pushes higher. Around about $30 seems to be the case on the upside and the downside as Ukraine moves in and out of the press. So just bear that in mind. But at the moment, gold is testing that 1295 level. If it can move above 1300, that would open up the 1316 resistance area. Okay, so what are the key events that we need to be looking out for this week? Well, there's actually quite a lot going on still. Tomorrow we've got the Chinese industrial production number, and also Euro traders will be looking out for the German ZEW sentiment. And also you've got US retail sales as well in the afternoon. On Wednesday, the UK is the main focus with unemployment and also the Bank of England's inflation report. Now, the Bank of England inflation report is a very important bit of data as it contains the Bank of England's latest forecast for inflation and growth, and it could also give a hint as to exactly when, or give a gauge as to when the Bank of England will be looking towards raising interest rates once more. On Thursday, we've got Japanese growth and also inflation data for the US. And on Friday, we close out the week with US University of Michigan consumer sentiment and also the building permits as well. So lots to still focus on this week. So I wish you good luck in your trading this week, and I'll speak to you next week. Thank you very much.